In an era where instant gratification defines everything, from one-click shopping to viral social media trends, the idea of waiting years or decades for investment returns can feel downright archaic. But patience remains one of the most powerful, time-tested advantages an investor can have. It's not about chasing quick wins or timing the market perfectly. It's about committing to a strategy and giving time the chance to do what it does best: compound. The stock market is inherently volatile. Prices swing daily, sometimes violently, based on economic reports, political developments, earnings announcements, or even a tweet. Reacting emotionally to every dip or surge often leads investors to buy high and sell low, the exact opposite of successful investing. Patience is the antidote. It helps investors stay grounded, ignore the noise, and avoid impulsive decisions that can derail their long-term goals. Time and again, history shows that markets recover and reward those who stay invested. Major indices like the S&P 500 have weathered wars, recessions, crashes, and pandemics. Yet over decades, they've consistently delivered strong returns. Investors who panic sold during downturns often locked in losses, while those who stayed the course typically recovered and came out ahead. Patience allows you to benefit from the market's remarkable resilience. Patience also unlocks the magic of compounding, the phenomenon where your investment returns start earning their own returns. Compounding is exponential, not linear, and its full power reveals itself only with time. Constantly jumping in and out of positions stunts this effect. Long-term holding lets your wealth grow steadily in the background, quietly but powerfully. Investing is as much emotional as it is intellectual. Market downturns test your resolve. When portfolios drop, the instinct is often to flee. But those who remain patient, who trust their long-term strategy, and who stay invested through the turbulence, tend to outperform. Patience is emotional discipline in action, and the most successful investors are often not the most brilliant, but the most steadfast. Few exemplify patience like Warren Buffett. His legendary success comes not from chasing hot trends or rapid trades, but from buying great businesses and holding them, sometimes forever. His long-term mindset has helped him ride out market panics, benefit from compounding, and minimize taxes and trading costs. His message is clear: wealth is built slowly, not suddenly. Trying to time the market, getting in before rallies or out before crashes, is nearly impossible, even for professionals. Miss just a few of the market's best days, and your long-term returns drop significantly. By staying invested, you ensure you're present for the highs and the lows, and over time, the highs tend to win. Patience also pays off in cost savings. Frequent trading incurs transaction fees and triggers short-term capital gains taxes. Long-term investing, on the other hand, reduces turnover, qualifies for favorable tax treatment, and keeps more of your returns in your pocket. Companies take time to grow, scale, and innovate. Patient investors give businesses room to execute their strategies, weather setbacks, and realize their full value. The long-term perspective shifts your focus from short-term hype to business fundamentals, where real value is built. Perhaps most importantly, patience transforms investing into a meaningful, goal-driven process. Instead of obsessing over daily stock movements, patient investors stay focused on long-term objectives like retirement, home ownership, or creating generational wealth. It becomes less about chasing trends and more about fulfilling purpose. It's a conscious, active choice, a decision to trust your research, your strategy, and the historical trajectory of the market. It's about doing the emotional heavy lifting, holding steady when the world seems uncertain. And in the end, that quiet discipline is rewarded not just with financial returns, but with peace of mind. In a financial world obsessed with speed, the patient investor plays and wins the long game. Markets fluctuate, emotions rise and fall, but the steady, disciplined long-term investor builds wealth that endures.